Hey, what's up guys? John here. Small local regional banks and credit unions are getting set up for the greatest rug pull of all time, and we are going to witness a large-scale consolidation of U.S. banks to the likes in which we cannot yet imagine happening before our very eyes right now. Watch what's going on. I'm going to connect the dots for you so you can see things clearly for how they really are and what the attack really looks like on these small banks and how they're going to push millions and millions of customers and consumers from these small, local, mid-size regional banks, credit unions, up to the big guys. I'm talking Bank of America, JP Morgan Chase, Wells Fargo, Citigroup. All these large banks are going to start to get positioned for the great takeover of the U.S. banking system. Please hit the like button. When you hit the like button, YouTube is going to share this content to educate more people about what's really going on in the U.S. economy. Every time you hit the like button, YouTube will share it with one more person, so consider educating somebody else about the facts of what's going on. Also, today's video is sponsored by GreatCreditFast.com. That's GreatCreditFast.com. If you want to fix your credit, we would love to help you and position you for what I believe is going to be the greatest wealth transfer of all time at GreatCreditFast.com. Remember in 2008, 2010, the only people getting funding were people with good credit. So we'd love to help you. Take a look at this. So Fed Chair Powell says small banks likely will be exempt from higher capital requirements. What they're doing and what they're going to start to do is they're going to position these large banks as being the safe haven in a world of instability. This is what they're going to start to do. In an unstable environment, they're going to say, if you want peace of mind, you got to go to these big banks because these smaller banks are not safe. Silicon Valley Bank, SVB, First Republic, I mean, these aren't safe banks, right? But as they're doing that, they're going to start to really start to push forward on further regulation and disclosure from these banks for, of course, the safety, the general public, right? For everybody's safety, they're going to really start to nitpick all of these banks. But if you look at what the government's doing, through TARP, around $245 billion in taxpayer money was used to stabilize more than 700 banks. And as part of the plan, the government bought preferred stock in troubled banks such as Bank of America, Citigroup, Goldman, JP Morgan, Morgan Stanley, Wells Fargo, Bank of New York Mellon, and State Street Bank. If you can't see the writing on the wall, I don't know what to tell you. Even Janet Yellen can. She's saying that these bank mergers are going to be necessary. Now, she put this out in May 19th. What's very interesting to me is that she knows what's going to happen. And why she's doing this and why she's continuing to say this is because she wants to normalize it. The more press, the more information around this topic that gets spread out through the general public, the more people will digest it over time, and then it'll become normal. Like JP Morgan Chase acquiring First Republic, even though they have more than 10% of the U.S. banking market share, before that would have been illegal. But because it's a distressed situation, it was completely fine. It was necessary. That's what they're doing. So they're going to allow these big banks to start acquiring more and more market share. It would not surprise me by 2025 for JP Morgan Chase to own 20% of the U.S. banking system. It wouldn't surprise me at all. U.S. bank deposits are down 39 years, right? They dropped by the most in 39 years at the start of 2023. So how are these regional banks really going to make it? It's the big question. How are these regional banks really going to make it? When we look at how this is all kind of playing out, they're already putting out the narrative right now that community banks in the U.S. have been in decline for decades. This is just a natural progression of the U.S. economy. People are they want to go to these big banks is what they're saying. But if we look at what Jerome Powell said, he said Federal Reserve interest rate pause won't save regional banks. To the extent it is well distributed, the system could take losses, Powell said during a press conference. We do expect that there will be losses, but there will be banks that have a high concentration, and those banks will experience larger losses. Then it goes on to reference Silicon Valley, Signature, First Republic, saying they had $556 billion in assets at the time of the demise, and it amounted to 3 of the 4 largest bank failures in U.S. history, even though the system has been sparred in other bank crises since JP Morgan Chase purchased First Republic. In May 1st, there remains threats on the horizon. Chief among them, the Fed's ongoing policy of quantitative tightening. I mean, you look at their policy, you look at what they did or what they've done. The amount of money that they printed, this false sense of security that they painted in the economy, it allowed these regional banks to feel a certain level of security. I mean, everybody was getting rich. They were lending tons of money. Large banks were lending tons of money. But what's ultimately happening now is the everyday consumer is in very, very big trouble. A lot of the people that took out these auto loans, credit card loans, single-family home loans, commercial loans for real estate, a lot of loans are not performing the way in which they were 24 months ago. And so what's ultimately going to be happening here? These banks are going to continue to start to see more and more and more defaults. And are they going to get the big bailouts from the government? I don't know. I don't know about that. I think what they're going to probably do is they're going to have one or two examples of a small regional bank, maybe where they don't get a bailout, which is going to push everyone to the big banks. People are going to say, oh, I can't take that chance. I can't take that chance. I love my local bank, but at the end of the day, I need to provide for myself. And that's what's going to happen. We're going to start to likely see more and more attention flow to these banks. But look at this. This came out, this is a perspective on the regional bank turmoil, came out about a month and a half ago. It says impact on lending. As a result of the Fed tightening cycle, 10 consecutive meetings of increasing the Fed funds rate and rising borrowing costs from credit cards to auto loans, lending standards have already been tightening, leading to this recent banking turmoil. In fact, at the end of the first quarter, it was noted that a net 45% of banks had reported tightening lending standards, up from 15%, suggesting easing lending standards just from a year ago. On May 8th, updated figures from the Fed's Senior Loan Officer Survey for Q1 will be released, likely show the trends of further tightening in lending standards. In particular, small, medium-sized banks will likely tighten their lending standards, and which will in turn will weigh on both small business borrowing and investment going forward. Small business relative to large business, small business relies heavily on regional banks. This is what a lot of people don't realize, that when people get denied for credit from the big banks, they go to the small banks. People prefer to go to the small banks. You have a tight relationship with your banker. It feels like home when you walk in there. And when they start to restrict their lending because their deposits are diminishing and their loans are not performing, it's a horrible thing for America. Like, this is a tragedy for America to witness what's happening right now to regional banks and this rug pull that's being positioned on them. Rather than large banks with $250 billion in assets for financing, as a result, the regional banking turmoil would disproportionately hamper small business. It is not surprising that the net respondents of the NFIB Small Business Optimism Index reported easier availability of loans declined to be the lowest level, 9% since 2012, 2% saw now as a good time to expand, the lowest level since the great financial crisis, as small businesses make up 48% of total employment and generate 44% of total economic activity. A slowdown in small business will be a headwind for economic growth going forward, right? But remember a couple of years ago, they said it wasn't safe to support small business. You had to go to Walmart and Target, and these larger corporations, it was safe to go there. They were the ones that got all the money. They were the ones that got all the big bailouts. Now, again, this is just another attack. Just like when the eviction moratoriums, some people might say it was a good thing, some people might say it's a bad thing. But if you look at what happened with those eviction moratoriums, a lot of the largest landlords in America ended up getting huge bailouts, massive bailouts, some of which reported more profits during 2020 in rents collected than in 2019. How would that be possible? You have a lot of mom and pop landlords had a completely different story, right? And this story is going to continue. But if you look at this, these banks, these small banks, they do everything for America, and commercial real estate is going to be one of the nails in the coffin. Because this commercial real estate tragedy that's unfolding right now, already $64 billion now classified as distress, they call 70% of CRE is held by these regional banks. 70%. So if you look at this, commercial real estate, they already said it's going to be like 2008, but they said 2.9 trillion, 50% of the 2.9 trillion is going to have to be renegotiated in the next 24 months. So look at how this kind of plays out here. So 2.9 trillion, 50% of which is 1.45 trillion, right? If regional banks hold 70% of that 1.45 trillion, they have $1 trillion in problems, these small banks. But it's just one loss after the next for these banks. But look at this. This situation is very interesting. So when you look at these credit unions, they grabbed a large block of this market share for auto loans. And I talked about this yesterday, saying how much this auto crisis is impacting everyday Americans. Look at who is lending on these autos. Look at banks. Banks are taking a large block of it, but credit unions have really scaled up their operations. And same here. With used and new financing, credit unions are just gobbling up market share. So what do I think is going to happen here? Well, I believe what we're going to start to see here is we're going to see Jerome Powell continue to increase interest rates. And Janet Yellen, look, Jerome Powell says he's going to continue to increase rates because he has a long way to go. They're going to continue to put the pressure on these banks. They're going to continue to pursue these banks and look at their underwriting and push forward further regulations, push forward more safety measures for big banks. They're going to do everything that they can do to position these big banks as a safe haven for U.S. But as this is happening, Janet Yellen came out again. This is why it's so important. June 7th, she says she wouldn't be surprised to see more bank consolidation, right? She said that June 7th, and then you look at what she was saying before. She said that, let's see here, this was on the, let's see here, right here, May 19th. So 2 weeks later, she said the same exact thing. They're going to continue this, I'm telling you. They're going to continue this. 2023, we will see more bank failures. We're going to see many, many more bank problems for these small local regional banks. What do you think about this entire situation? Drop it below. How do you see this playing out this year with Jerome Powell continuing to increase interest rates? All it's going to do is push more delinquencies across commercial real estate, more delinquencies across residential real estate, home equity lines of credit, adjustable rate loans, credit card defaults, auto loans, you name it, more problems coming. Drop it below. Let's talk about this. Also, add me on Instagram for short form content I definitely won't post here. And if you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, we'd love to help you at greatcreditfast.com. You can click the link in the show note below this video. I'll catch you guys in the next one.